Hi all, this is Akshara Menon from PMS Bazaar. Welcome you all to the episode 3 of NRI exclusive webinar on the topic From Balance to Bull Market, Handling Volatility in Indian Financial Markets. All of us know June 4th, India will elect its new government. The nervousness in the market still prevails to buy or to sell or to wait for the day. We would like to know the last 5 general elections. Sensex and Nifty traded higher 6 months after the announcement of election results. Looking back at that last 3 elections, the indices were up at the end of the first month itself. So here the question comes: how do you master volatility amid the election season? To answer them, we have a renowned speaker for the day, Mr. Anil Rego. Mr. Anil Rego is the investment professional, entrepreneur, and author. He is a founder of Right Horizons Group, which has started about 19 years back. He is also a CIO of Right Horizons PMS and a fund manager of few of its schemes. Anil is a pioneer in contrarian style of investing and a seasoned investor over 3 decades. He brings an experience of market cycles and believes in delivering superior risk-adjusted returns through disciplined investment process under his leadership. PMS schemes have been the top performing funds. Prior to starting Right Horizons, Anil worked in finance department of Wipro Technologies in fields like business planning and mergers and acquisitions. Before giving the podium, I would request the participants to put their questions on the Q&A box, which will be answered by the speaker after his presentation. I request the participant not to put any stock-specific questions on the chat box. Over to you, sir.
So, I guess it's a very interesting times, and there are a lot of projections. There are a lot of anticipation, expectations, both positive and negative, and this normally happens when you are in election time, right? And sort of that's where we are. So what one will try to do as part of this is to session is to go and have a look into, what are the potential impacts on the markets, and we will look at various scenarios, and accordingly, you can take your, decisions on your portfolios. So to start off with, it's important to step back and see where we are, right? So there have been a lot of reforms, and so if you go back into not only from the current government, from the past, I think the insolvency and bankruptcy code, really helped get back our financial system in order. We have labor reforms, fiscal and tax reforms. There is a lot on digitization, and we can all see how much each of us use, all the digital platforms. India has been right at the forefront of this, and you can also see some bit of stuff around, the infrastructure side. There's been a huge spending out there. The monetary policy also has been, flexible, and inflation targeting has, been done out there. You've also had a lot of incentives for exports, and so you had production-linked incentives which are introduced, and that has sort of helped manufacturing companies. And you also have the real estate bill, which has completely transformed that sector. So on the back of that, you have a lot of say government spending. The capex has been significant from the government. So if you see, the infrastructure spending is pretty steep. You can see right from 22 onwards, a very, very steep curve, and that's actually helped bring a lot of growth to the economy as well. And what is good to see is that you have capex growth across all constituents, both the central government, the state government, as well as from listed corporates. So that's a good sign, because initially it was just about maybe capex coming in from the government. When it moves on also to the listed companies, the private sector, that really adds a new dimension to it. You have infrastructure driven structural growth. So here you can see uh, where the center has spent and see how exponential this particular, the growth has been. So it's been very, very strong. And if you go back and see many global economies which have done very well, okay, they have done well after there was a huge infrastructure growth that happened. So you create the infrastructure, and then you find that corporates and companies and individuals are able to leverage that, and you find growth pretty strong in the economy. A lot of government initiatives around the PLI scheme that we spoke of. You have, uh, the National Master Plan for the roads and railways and the airports, etc. So there's a lot of, infrastructure spending happening, and that has been really propelling the Indian economy. Exports also, interestingly, has grown very, very well. You can see both merchandise as well as service exports have been growing well. And so if you see, there's been a reasonably good growth, and there are expectations of growth also is very, very steep as we go ahead in the future as well. So you will see from the previous to the current decade, there may not have been as much, but from here, I think, the exports is likely to go up very sharply on the merchandise side. So which basically is a reflection that you find that, manufacturing and, China plus one, there are a lot of triggers for that to happen, and that one expects will, propel the next phase of growth. And so that sort of sets the background to, where we are now. A lot of people say, yes, if there's a change of government, will this sustain? Will, there be a roadblock on reforms, etc.? So many, many concerns are coming in from people in terms of, what could be the potential impact, because I think what has really helped India over this, last, decade or so has been, that you have seen a good stability on the political side. And also, of course, various policies have been, instrumental in seeing things grow well. So the question is now, will it impact? If so, how much, right? And so starting off with, should we actually be worried about, low voter turnout, and, because that really, got people jittery in the initial, legs of voting. And, our view is that it's actually, not too bad. Okay. So actually, if you go back and see, our voter turnout is similar to 2014. So if people sort of go back and, have a look at it, that's where it is. Okay. Yeah. So it's sort of not as bad. And yes, there may be concern in certain areas for the current government or the current political party. Okay. So, but we don't see too much of an issue around there. And markets have also been always been a good indicator of, change, because markets also is about, the investments of a whole lot of people, right? So, and it's sort of in at many times tends to uh, reflect the sentiment, because it's the cumulative will of the people who had voted, and similarly the cumulative uh, people and who determine the market direction, right? So to that extent, markets have normally got it right, and you will find that markets have not gone up very well, but definitely it's been on a positive side. Yes, in the last few days there have been some bit of corrections. Um, what is our perspective, right? And this is crystal ball gazing. This is a way, obviously this is a point of view, right? So, and to that extent, one is sticking one's neck out and saying, what can be possible scenarios, okay? Because what one is trying to say is how in various scenarios, how bad it can be or what do we see, right? I think the question is, if BJP wins fewer than 230 seats, and I'm saying if it does not form the government, right? So if you have a situation where the BJP does not form the government, is where I think we see slight, a little more volatility there. Of course, in recent times, it's, while for a period of time, a lot of people said, and felt very comfortable that, the BJP will win with a good majority. Okay. But in recent times, there have been a lot of jitters out there. Possibly also you can see the decibel of campaigning also increase there to reflect that. Okay. But we think that, in such a situation as well, you'll find probably the Nifty will fall by about, 15% or so. So I would still say it's not as bad. Uh, and it'll possibly be in a slightly longer time frame, because if a situation like that happens, I would believe that, the other will be a coalition government, and by the time all the dynamics come into place, there will be a little bit of volatility during that period of time. So, but this is definitely not something that we are expecting. I'm just capturing this as a worst case. In fact, um, one believes that the NDA will probably come in with a simple majority at least, and most of the other scenarios, where they don't have stability. Yes, there may be some little bit of impact there, but our expected views that you'll probably see more of a positive side to things. Okay. And I think that even if some of this, 4-5% fall, etc., even if it happens, one thinks that then it'll last only a few days, right? So where, it will have a much larger impact is, if it is negative, and the current government is not able to come to power. I'm not able to visualize that as a scenario as of now. I think if at all, maybe the 400 number, which some people are talking about, okay, may not happen, but I don't think you'll have the other extreme also, that we'll see such a large downward swing. So that is the view that we've taken. In fact, based on that, we also gave out a bit of a positive view, for investors to possibly even invest even before the election results. Uh, and just if you look at what can get impacted, right? Some of these stocks, which we some people have called it as a Modi basket, right? Of stocks, and I'm sure you can Google and see what are those names, and many of you may be aware of them. Okay, but so if you look at it, they have run up very well, right? So if you have a little bit of negative, these are the ones which will be larger impacted. While I'm not expecting that the market really has a major correction, but these stocks will definitely see a much larger correction, if we find that there's a change of government. Okay, so and we're sort of saying elections and beyond. What is it that we think? Because we have a positive outlook, and we believe that yes, some of the sectors, that infrastructure and defense and PSUs, etc., are sectors, I think, which will continue to do well. A lot of the manufacturing as well, I think, will continue to do well. Capital goods, power, banking, I think all of these sectors are the ones which we think will sort of continue to do well. So, I think one of the triggers also can be that, a lot of people have been waiting on the sidelines. I think including FIs have been, little away, and FI ownership is now 16%, which is sort of in a lower band. And we won't be surprised if, post elections, and if there's some bit of stability, FIs also will sort of come back, and probably, that will trigger a bit of a up move post elections as well. At the same time, wanted to see, okay, what about the worst case? What if it happens? What do you think? And what is our thesis and why we believe, will it be a long-term impact? Will it be a short-term impact? What is interesting is if you look at data, um, other governments also have not done too badly. In fact, they've done, interestingly, if you see the Congress, period, probably markets love the Congress and, that they've done very, very well. So, what I think has been, if at all something has been negative, is a little bit where there's a lot of coalition and, some of the unexpected things happen. Yes, probably in a situation like this, if we have a negative, we will have, uh, you know, uh, it'll be interesting to see, what emerges and, it'll be a lot of coalition politics, coming to the fore. Uh, the But at the same time, our point is still that India is in a certain trajectory. And because it's in a certain trajectory, we think that the underlying economy is likely to do well. So we think that irrespective of government, so the medium to long term, beyond say a couple of months, it will get back to economics. And we think that we are very well placed, and one expects that the per capita income, significantly improves. In fact, this particular table expects it to like double, more than double, right? So if you see a situation like that, I think the economy will continue to do well, and underlying, would be positive there. And while you find your per capita income rises, you will find that, the more affluent, investments will come in. The consumption also sees a little bit of a change as you see, some bit of affluence happen. So that is something that we believe also will come in towards India. And we also think that we'll have a lot of flows. In fact, one of the things where we also believe that markets are unlikely to come down very sharply, even if there's a negative, impact on the elections, is that of domestic liquidity, right? So if you see today, domestic institutions, which is basically combination of the underlying triggers, is the SIPs that are happening in a very large way. You find uh, the PFs, etc., also continuing to put in money. So that inflows are not one-time flows; they are sort of regular long-term flows, and we don't think it will stop so easily. So to that extent, yes, there is likely to be a bit of a positive out there. We also believe in the longer term, India will also attract global liquidity, and you will probably find that, a larger share of, ETFs, the exposure to India will be larger in global and emerging market ETFs. So that is something that we think is also likely to happen. And so you're going to have a combination of domestic and global flows. So it basically means that, if the economy is doing well, you'll probably, see markets do well. And this whole curve of, economies when they move from 1 trillion to, 5 trillion and beyond, you actually find that from 2 to, 5 trillion, you find a bit of a spike that happens in economies globally. Okay, so whether you go back and study the US or China and, some of the other developed countries as well, you'll find that once, it crosses 2 trillion is where there's a bit of a spike that happens. And so this is, I think, a phase where, India is in, and you'll probably see that happen. So interestingly, this chart has that, after the 3 to 4 trillion, which took 4 years, now they're clubbing 4 to 7 trillion, right? You're not just saying 1 trillion at a time. You're saying that, you have almost like 3 trillion, so sort of over 6 years. So that's a crazy rate of growth. And I think that is something which will also get the economy to do well. I spoke of FI domestic flows, and I think that's something that will also continue to be strong as we, go forward. And a lot of questions have been coming saying that, yeah, large cap, mid cap, and stuff like that. And what do we see? Because there also have been concerns that, from people saying mid caps have run up very sharply, and, what do you think about it? So, interestingly, if you look at mid caps, yes, if I look at a 2-year period, you'll find that the index growth has been faster than the earnings growth, right? So, of course, the small cap index, if you see, it's just about 4%, right? But is the PE change? But actually, if you look at a longer term period, the index returns have been sort of lesser than the earnings growth, right? So in the mid cap index, it's almost similar, but the small cap index, which is what everybody is concerned about, interestingly, the last 5 years, the earnings have grown faster than the index. Okay, so which is why we're not as concerned, we're not as bothered. We believe that some of it will continue. If you look at the earnings growth that people expect for 20 through 25, and there also there's an expectation that mid and small caps are likely to grow faster. While estimates in our view, or the street estimates are coming for small caps to grow at 24.5%. It's lower than mid caps. One won't be surprised if that also gathers speed and in actual when you go forward, right? And the other aspect is about valuations. So if you look at valuations, uh, we are saying FY25 valuations, forward valuations. Okay, so if one looks at even that, you are not in too bad a place, right? So, so that is something which gives us comfort that we don't think mid and small caps are also, really likely to see a large correction. Probably in this phase, we think that both the large caps and mid caps are likely to grow at similar, or possibly mid caps and large cap and small caps will grow faster over a period of time. So that is something which is definitely there. The ROE, return on equity, also has been improving, and that is also a factor that makes us comfortable. So in summary, want to keep it short so that we are able to take your questions. Okay. To argue that elections do not have a lasting impact beyond a point, and we saw different governments and the data of that, and it doesn't impact as much as how the economy does, right? So how the economy does, how the underlying earnings are. Okay. So today, we believe that we've seen many governments, and the underlying has been somewhat similar, right? So you found that that has been continuing there for a period of time, right across multiple governments. In fact, for some time, you even saw the left being part of the government, and even in that period of time, you continue to see a continuance of the same broad view, right? So that is something which is definitely what we believe strongly, that the economy is in a certain trajectory. Uh, I think there's no need to be as nervous about it, and more importantly, we believe that earnings, at least for a period of time, will continue irrespective of politics, where and sometimes the foundation that has been set today will at least last you 5 years, right? So the post that, I think we'll have to continue to see our governments doing the same right thing, or how is the economy doing. So in fact, we believe that at a time like this, if you get corrections, because of some bit of volatility around elections, they are actually a good time to invest. And in fact, that's something that we've also done. We've kept our portfolios to be able to take advantage of situations. So I think that's all from my side, and I will look forward to your questions.
Thank you, sir, because that was an elaborate one. I think most of the questions are already answered in this PPT. Thank you for giving such an elaborate answer. So, one of the last slide, you were talking about the short-term impact of these elections. So, considering the short-term impact of these elections, what kind of a solid investment plan should an investor have during such time?
Yeah, so like what one was saying, in some form, we need to uh, continue to do the same thing, right? So, I mean, what does election have to do with one's portfolio? Like it's also to do with because many times we think that okay, I do something in a bull market, I do something in a bear market, and stuff like that. If at all, you calibrate your risk, right? And but you still be disciplined. You follow good asset allocation. Okay, it's important at such time because and something that I would like to point out is when small caps have done very well, the tendency is that investors chase that particular category, right? And it's good to have an exposure to it, but if you overdo it when the cycle turns, you know what will happen, right? So and they can be very volatile. So the only thing I want to emphasize right now is maintain a good asset allocation, okay, both in terms of debt, equity, let's say gold, okay, and the second thing is yes, it's good to have a good gold exposure, of course. In recent times, gold has sort of done very well. So I would still not do it in lump sum. But I think a 5% or so adds a little, what I call as portfolio insurance to it. The third is that, within the equity, spread it out. Look for, funds which have, long-term performance, funds which manage risk well, funds which are themselves disciplined in what they do, right? So I would still say it's back to the basics. Continue with that, and I'm sure you will do well.
It's better to stay invested. That's what I want to take away. And one more follow-up question is that what kind of advice do you give to the investor who prefer to sit on cash now because they're waiting for the election results to come out and they're expecting a dip, so they're waiting for the dip and then they will invest. So, what kind of advice you want to give to such investors?
Yeah, see the um, sometimes it's a little risky, I would say, for investors who are sitting in cash right now. And the reason is somewhere one thinks that maybe we will see, a little bit of FOMO, right? And the reason being, there are a lot of people sitting with cash on the sidelines. Okay. In fact, I think the number of funds also are sitting with cash, so to that extent, if so I think the risk is on the upside rather than on the downside. Okay. And if markets get into momentum, then, chasing it will actually make it a little more risky for you. So if I were investors, maybe I would not, wait for all my money being put, after, an election result.
Okay.
If at all, if you want to be conservative, maybe I would have put at least 50% now and say then for the rest 50% say, okay, let me see how, the results are and how markets are and the environment and then decide later. But I think, I don't think it's a good idea to, be too high in cash right now.
Okay, so does any of your funds, sit in cash for capital preservation, the current scenario that we're going under?
Sorry?
Any of your funds, like you have six funds, any of your funds are sitting in cash currently for capital preservation?
No, see, I think capital preservation is a little different, and just keeping cash in portfolio right now means unless you keep very large amounts of cash, doesn't make too much of a difference, right? So if let's say you keep 50% cash, and I don't think any fund manager, should or would be doing that type of stuff, right? So right now, interestingly, in the small movement that we do, between periods, we are fully deployed. Okay, and that was a call that we took, and that's a recommendation also that we gave out to clients that, invest before election rather than wait for the results.
Okay. So you've jotted on like few scenarios, like if BJP government comes into with majority, if it doesn't seek majority, and third one was like if it doesn't come into power. So there are a lot of
Yeah,
scenarios that you jot on. So in each of the scenarios, so what kind of a
yeah.
sectors that you're looking out for? For example, if BJP government has secured the maximum seats, majority more than 300, if suppose in hypothetical situation again. So what kind of a sectors that you prefer to be invested on?
Yeah, I think, I don't know if I might change the sectors too much based on whether they win or not. But yes, because there's been a huge infrastructure push,
Mm.
right, by the current government, I think some of them, right from, the PSUs, railways, definitely I'll be conservative on PSUs if there's a negative result, right? So, for the BJP. But other than that, maybe I would still believe I don't think governments will subsequently also lessen the pace of growth. One would still be invested, maybe watch for the subsequent budgets and see, is the allocation sort of continuing or going down? And if it is going down, then maybe get a little bit out of infra, get a little bit out of, some of these sectors. Defense is something else, some of the other one. But I think sectors like manufacturing will continue because of other triggers, right? The other triggers, including companies wanting to diversify from China, etc. So to that extent, yes, sectors that we like will, and we also captured some of them were right from the infrastructure ones like railways, PSU, defense, the infrastructure side. Manufacturing, in my view, is good irrespective, and also ones like power, I think will continue to do well.
Thank you, sir. Let me get a question from Sudhir is that how do you perceive bull market in the backdrop of budget for 2024 or 2025, where a lot of recession might be impacting in the market over a period of time?
Yeah, so I think we'll have to wait and watch because I again say sometimes this is like astrology, like you try to predict what the government does. Okay, and so to that extent, I would say we have to wait and watch. But yes, there have been concerns from various people saying that, and there have been rumors floating around as well, saying that maybe there'll be a tweak around in some of the capital gains and stuff like that. Yeah, so if there are factors like that, in fact, those may see larger impacts than something on elections. So, so I'm just saying at times you may think, okay, elections is a big problem, but the budget may end up being okay. But still, I don't expect still the government to do something as crazy. So hopefully they maintain continuity. I don't think there's need to tweak around too much, because things are anyway in momentum. Income tax collections and all of it has been good. So why, honestly go and tweak around and change things? Why? So I think and hope that there will be continued, the current policies will change and hopefully taxation also will change. They did come back and lessen the corporate taxation, etc., which is good. Okay. So I just hope nothing happens. And so I'm not as bearish or negative, as much as the rumors are coming around.
Got it, sir. So next question on Natarajan is that what could we expect in case BJP wins with the normal majority with regards to the inflow from FII?
See, I think, and so my point to people has been, do you think BJP will win or not? Because the number beyond a point doesn't matter. Yeah, so if they don't have a simple majority, then there are push and pulls from various constituents of the alliance, right? So that may be there at worst case. But I think if as a party itself it is able to get a simple majority, I think that is good enough and that is stable enough, and there's no reason why between that number and a higher number you should have higher stability. In fact, I have the other thesis. I say that if it's very high, right? Sometimes political parties do things which without getting consensus, right? And that may actually be a more negative scenario the way I look at it. Okay, so where there's a balance, then policies come out as more, thought out. It is, carefully done, consultative. So I think, I still believe that a simple majority is enough, and I'm sure FIs also will put in money. I think what they don't like is to see uncertainty, and if that does not happen, then yes, there may be some bit of volatility and some bit of questions around that. But otherwise, if there's a simple majority, I don't see an issue.
Okay, so the question, Mukesh, is that it's regarding a sector question. If PSU weightage is 30% in a total equity portfolio, what's your advice? When one should exit from PSUT?
No, so this is something which you know I don't think we should take such crazy weightages. Okay, uh, yeah, a sector like financial services, which has almost many subsectors under it, you can take that type of exposure. For investors, sometimes I find them taking concentrated bets. They are great. Okay, as long as you're able to time the exit also well. Okay, and so that is something that you should watch for. So if I were you, I would be a little more spread out and balanced and not put so many of my eggs in the PSU basket.
Got it. But why do you think the customer spending will reduce? One of your interviews, I could see that you were expecting the customer spending will rise, benefiting the consumer discretionary sector. So is the right time to invest in that sector now, sir?
So I think India has been reasonably a consumer economy. Okay, so you will find that, and that will also, consumer will still do well in our view. Uh, so if you look at the demographics as well, that will continue. Of course, there will be pockets of greater opportunity, I would say, right? So because on the stock market, they're also trying to say what will go faster, right, than the rest. And sometimes the what will go faster is not the very basic stuff. The what, as we saw right on the slide on how the trends keep changing based on per capita, GDP. So you will find that it goes to, more luxury goods, etc. Will do very well. Okay, and it's for somebody investing in equities. Some of those may be larger opportunities that they can sort of take advantage of. So I think like in all sectors, I think you need to be able to also choose your stocks well and see within the sector maybe which are the ones which are likely to do better than the rest, and then you'll also see better returns accordingly.
Yeah, when in your PPT you were talking about small and mid cap giving space in this current market scenario. So do you think it's better to give a cushion on a large cap as of now in terms of allocation?
Yeah, I won't be surprised if if and when FIs come in, because they put money significantly into large caps, also because of the quantum of money they put in, right? It comes in lumps. For say Indian investors, it may come from institutions, but a lot of it may be already pre-decided, because let's say for an SIP, you already have which fund it goes into, which sector it goes into, or which segment it goes into, right? So I think so large caps could also come back and do well. So I would also believe that it's good to maintain allocation to large caps, and what that can also do is it'll create stability as well, right? So for an investor in their portfolio, like if you maintain a reasonable mix of large caps also, I think will help safeguard you from any potential, turn or fall in sort of mid and small caps, because something that goes up fast also comes down fast. Okay, the question is when, right? So I would believe as time goes by, it's good to slowly start increasing weightage into large caps.
Yeah. With that, S&P upgrading the outlook of India's sovereign rating from stable to positive. So do you think it would increase the asset allocation towards banking sector now? So what are your thoughts on this?
Yeah, so I think banking also should do well as a sector. So, in fact, maybe even if you look at HDFC Bank, right, on a price by book today, right, it sort of is at a very good level compared to the long term past, right? So to that extent, I think even some of them should end up coming back, and so that's possibly also another area that I think will do well as we go forward. Yes, I think even ones like technology, for example, which have taken a bit of a breather, for some time. Uh, uh, we'll have to wait and watch and see how those also evolve as we go forward. So some of these sectors may also come back in line with a broader market move.
So given that the election-led volatility, this is and nervousness is still prevail in this market, so what are strategies that you would recommend to your clients to navigate this volatility?
Yes, so like I said, the first thing is to be diversified and maintain an asset allocation. I think as we go forward, be a lot more careful, to spread out within, like, and that was the point that I was saying. Um, so slowly, I think, even, right now, quality is not respected, but, when the tide turns, you'll know, you know, uh, what happened to some of the others. So it's important to maintain that balance. I think for investing, systematic investment, phased investments, I think there are fantastic ways to continue to invest. So that's, I think, something investors should continue to do. Don't do too many exotic things, okay, including for HNI and large investors. Yeah, so I think just be disciplined, spread it out, and that should do well.
Yeah, when talking about more specific to your funds, you have 6 funds in the PMS. Can
Yeah,
be aggressive, super value, flexi cap, perennial, India
yeah,
plus all seasons. So
yeah,
all of these have given a numerous alpha, significant alpha, and since its inception. So
yeah.
how do you chase that alpha?
Yeah, so I think that our view is not truly negative on mid and small cap, so we will continue with that. We believe that one can continue with that allocation. In fact, our super value, and some of our, other mid and small cap funds have, we've been able to, get a lot of multi-bags. In fact, we made that itself as a methodology, right? So, and there we're looking for companies with good earnings growth. And so when we have sort of good earnings growth, typically then you'll find stock price growth also follows, right? So I think so the mid cap and especially super value is something that we continue to recommend to clients. Of course, for stability, I think we have the flexi cap, and the flexi cap, you know, uh, from our side itself, we go and balance it out. We move between large caps and mid caps, and it's actually a true flexi cap because the size is not too large, so we are also able to move between large caps and mid caps and small caps and move it back, right? So that is something which we believe will add stability. At the same time, it may not be the best performing fund, right? Because it will have a combination of both. So if the small caps are doing well, then it will uh, get an average between small caps and large caps as a thing, right? And probably do a little better than that. So so for somebody who's looking at a stable portfolio and looking across seasons, because on the other hand, if you are not able to do it yourself as an investor and move between, right, you may find that if anyone that you do in the long term may or may not give you the same results, right? Because if you continue to be, for example, in mid and small caps and large caps do well, then you miss out that, and vice versa, right? So FlexiCap tries to sort of do that. India Business Leaders is something which I believe at this point is interesting. We are one of the very few large cap funds there, and it has done very well. It's delivered a good alpha. So so things like that, and a lot of the time people say, oh, in large cap, how do you deliver alpha, right? So, but actually, in terms of choosing between let's say, moving between the types of companies and moving between the sectors and the stocks and the ones with higher earnings growth, etc., there is some bit of scope still in a country like India to maybe do better than the index. So, so I think if I were, an investor, I'll see what are my allocation across these three in my own portfolio, and then see where is it that one can, add a thing. Uh, Normally, we have a bias to any one, right? But at this point of time, considering where we believe we are closer to the 2003 to 2008 phase. Okay, it was a very large market move phase, right? And and in that phase, you found that it was a broader economic move, as well as it came out of a bad previous decade. Okay, like we have interest rates also sort of attractive. So multiple things, sort of come together in the market cycle, and we believe we are in that. And so in that cycle, you find all of them move together. So which is why I'm not giving any one. And I'm emphasizing that investors, it's good to be across this. Also because it's not mid and small caps have done very well, right? So while we are not negative about it, I mean, the risk is higher after they have gone up and done very well, right? So it's true that if I look at it from, let's say, 2 years back to now, the risk on mid and small caps is higher than what it was before, right? So, so that is something that it is important, so to manage your own risk in your portfolio, and which is why I'm saying, any of these three are good to have at this point of time. I'm not suggesting small caps as much as this at this time.
True. Okay, and see, what kind of changes that you've made into your portfolios lately? If you could share that with us. Is there any additions or deletions that you've brought into your portfolio? It can be any of your 6 portfolios.
Yeah, so I don't like to talk about specific company names, so I will avoid doing that. But we did, in terms of our philosophy, we manage risk actively. Okay, so and on the PMS, because we also try to take advantage of the smaller moves to a smaller portion of our portfolio. So for a part of a portfolio, we are tactical. And we found opportunities, like, if I went back right from 23 of April, that time we took a contrarian call and came and stuck a neck out and said small caps, right? Of course, we launched super value aggressive, and that delivered, say, 45% from April to August, right? And we, of course, closed it for the subscription. So we've done some of those in much larger, quantum, and we saw greater opportunities. But in a smaller way, we did, around February, we took some money out. Okay, we looked at the quality of our portfolios and said we think some volatility is coming around the corner. So on some portfolios, we reduced a little bit of the small caps. Okay, and we looked at what are the potential names that can be sort of impacted, and so we de-risked a little bit in that period of time. It was good because then we saw some bit of volatility. But like I said, over the last few weeks, we went and invested back in and stuff at a stock level. I mean, nothing major. I think one is we booked some profits on the PSUs when we spoke of around that February period of so. Okay, so that was good because after that, there was a bit of a correction around there. Okay, so though at the same time, we are not as bearish of it. Okay, but we did some of those tweaks. The rest of the stocks are more about, it's a natural process where we keep on evaluating companies, and when we find there are better opportunities than some of the others, then we also like to infuse them in to bring fresh blood into the portfolio. That is, I mean, so those are just the natural stable things that we've continued to do and keep track, I think. Yeah, so when we also started super value aggressive, like, we kept a little bit of mid caps because when we are starting, we wanted to play safe. That sort of has got redistributed into small cap, which is sort of the mandate of the portfolio as we sort of thing. So those are important, in terms of how we manage risk, and that is what we've been doing.
Yeah, when we talk about that, AI, artificial intelligence, have been applicable to every other financial services today. So, if you could explain about the role of AI into alpha bot products.
Yeah. So Alpha Bots is basically uh, we leverage on the IP of a technology company which is based out of Canada, and they have their development centers in Romania. They're probably people who have the longest experience maybe in AI globally, because they actually ran and index on Nasdaq. Okay, so for sort of a period of time, almost like 7 years, and that too they stopped that in 19. So they're very very early in in that thing, in this style. So and sort of that has matured well. So I think as we go forward, we've sort of seeded it because we want to be careful in some of the decisions that we take. Okay, so we watched it for some time. We have today small capital in it, okay, and where we get more and more complete, tweaked it around. It has now seen various cycles, including uh, you know, this whole Adani stuff, came and impacted at some point of time. Okay, so all of it, so we've seen some of those adverse cycles as well for the particular strategy. Okay, because we didn't have Adani in any other strategy apart from this particular one. So, and our point was, how do we tweak around so that the AI itself takes care of such situations? One believes that some of those scenarios also have been sort of now taken care of. So we believe as we go forward, some of it we think uh, will evolve and get better and better, and possibly we'll see disruption based on AI as we go forward.
Thank you, sir. That was a very elaborate answer, indeed. Thank you for that. When we come to the end of the session, I just want to pick this question into priority: mind over money. Probably, I want to introduce the person behind the question here. Having 35 plus years of successful corporate life, you stepped into entrepreneurship and started Right Horizons. What is the motive behind this decision? Rather than enjoying your retired life, what made you make this decision?
Yeah, actually, I took the decision pretty early. I actually worked only for about 6 odd years.
Okay.
Okay, before I took the decision of what I call is retirement for me. Okay, a very active one though. Yeah, so there were triggers for it. Okay, one of it was actually from the time I started my higher education, I set myself a goal that I'm going to start something on my own. So I had that entrepreneurial trait within me, and I also set myself a goal for retiring from corporate life by 35 and starting something. Okay. So actually, I started Right Horizons almost 4 or 5 years prior to that. Okay. So, and of course, what helped was, one is, I had set aside uh, a corpus, so I planned for it, and I said, okay, not only 35, but how do I work towards it? I set myself a goal. If I hit this and as a backup capital so that I don't put my family to risk, right? Then I will set out. So one hit that a little early, so one ended up getting out early. So what did I do at that point of time? I also, as part of my plan, I said, okay, what are the sources which can give me monthly income? One invested in a property, a rental one, and so the rental income would come in. Of course, what helped was there were a few factors which was positive. Interest rates came down, so my home loan rates came down, and property price also went up. So combination of those, equity also did very well for me, and so stuff like that. And so that was it. So by nature, I actually said I wanted to start out. I looked at various other opportunities as I went along the way, but with some colleagues, etc. But I realized that they may not be as serious about it. So I said, let me do something in an area which, I am not dependent on anybody else. Okay. And so towards the end of my working career, I realized I was already helping others, on their investments. And I saw the need that just as I was able to say retire from corporate life and start something on my own and look at a very non-traditional you know, uh, sort of goal, right? How do I help others? Okay, so that was a trigger for me to say, okay, to set up Right Horizons and say, how do I help others now achieve their financial goals? And that is how Right Horizons came about.
That's a truly inspiring one, sir, I must say. So that